Welcome back to Velocity Banking 101, Building Wealth in the Black Community. In today's episode, we're going to tackle a real-life scenario that many of us can relate to, having a negative cash flow. All right, let's dive into our example. Imagine a lady who has a monthly income of $3,000, but her expenses total up to $3,100, leaving her with $100 of negative cash flow. She's also carrying a credit card balance of $10,000 with a $400 monthly payment. Her rent is $1,000, and the rest of her expenses like utilities, food, gas, and car insurance is a total of $2,000, which can all be paid using her credit card. Now, before we get into the magic of velocity banking, let's take a moment to understand how credit card interest is calculated. If Our Lady's credit card has an annual percentage rate, APR, of 21%, and she lets her balance sit at $10,000, here's how much interest she'll be charged daily. That's right. By letting her $10,000 balance sit, she's being charged $5.75 in interest every single day. But don't worry, Velocity Banking is here to help. Now here's where the magic of Velocity Banking comes in. Instead of letting that negative cash flow hold her back, she's going to use her credit card as a powerful tool to eliminate her debt. Month 1 will look like this. She has an income of $3,000. As soon as she gets paid, she'll transfer $2,000 of her income directly to her credit card, keeping $1,000 in her bank account for rent because she can't pay her rent with the credit card. Watch what happens to her credit card balance. It instantly drops from $10,000 to $8,000. This is all because we put our income on the debt tool and made our money work for us. Throughout the month, she'll use her credit card to pay for all her expenses that can be charged, like groceries, gas, and subscriptions. This way, she's not only keeping her credit card active, but also taking advantage of any rewards or cashback programs. Understand the impact on interest and credit score. By consistently lowering her credit card balance, she's doing two amazing things. 1. Reducing the amount of interest she's paying on her debt, since credit card companies calculate interest based on her average daily balance. 2. Boosting her credit score, as lower credit utilization is a key factor in determining her creditworthiness. Now remember, she had $100 negative cash flow before we started Velocity Banking, but now her cash flow is a positive $300. I know you are thinking, how did that happen? When she put her paycheck on the credit card, this satisfied that $400 credit card bill. Now that payment disappears and is instantly turned into cash flow, just like magic. Now her expenses will only be $1,600, but we have to add on the negative $100 to make the expenses $1,700. And her new balance will be $9,700 because of the negative cash flow we started with. Now we need to calculate what the interest is for the month. Remember, the bank will calculate it off the average daily balance. So we will take the high of $10,000 and the low of $8,000 and get the average, then multiply the interest rate of 21%. Then divide by 12 months and get the interest payment of $158. The balance now is $9,858. She went from a $10,000 to $9,858 balance on her credit card and a negative cash flow to a positive cash flow after applying Velocity Banking. She didn't have to get a new job, start a side hustle, or change everything in her life. All she had to do was use the right strategy and put her money in the right places. Each month, she'll repeat this process, transferring her income to her credit card and paying her expenses with it. As her balance decreases, she'll have more room on her credit card for unexpected expenses or emergencies, providing her with a sense of financial security. Let's look at what month 2 will look like. Our new balance is $9,858. As soon as she gets paid, she'll transfer $2,000 of her income directly to her credit card again, keeping $1,000 in her bank account for rent because she can't pay her rent with the credit card. Remember, because she does that, the monthly payment for the credit card is satisfied. Now, her credit card balance will go down to $7,858. Once again, she will pay for all her expenses with her credit card, as the balance will slowly rebuild back up to $9,558 throughout the month. The interest for month 2 will be $152. Her new balance will be $9,710 on her credit card. Let's look at what month 3 will look like. Our new balance is $9,710. As soon as she gets paid, She'll transfer $2,000 of her income directly to her credit card again, keeping $1,000 in her bank account for rent because she can't pay her rent with the credit card. Now her credit card balance will go down to $7,710. Once again, she will pay for all her expenses with her credit card, as the balance will slowly rebuild back up to $9,410 throughout the month. The interest for month 3 will be $150. Her new balance will be $9,560 on her credit card. After rinsing and repeating, she would pay off her credit card starting with no cash flow, only 48 months. Compared to if she continues to make only the minimum payments, it would take her a staggering 465 months, or nearly 39 years, to pay off the entire $10,000 balance. She would end up paying a total of $29,391.61 in interest charges alone. Compare that to only $4,294 when using Velocity Banking. This is the power of Velocity Banking. The choice is clear. Velocity Banking is the smarter, faster, and more cost-effective way to crush your credit card debt and take control of your financial future. If you're serious about getting out of debt and building lasting wealth, it's time to embrace the power of Velocity Banking. Don't let another day go by trapped in the minimum payment cycle. Take action now and start implementing these game-changing strategies to accelerate your debt payoff and reclaim your financial freedom. I encourage you to share this strategy so we can start to close the wealth gap in America. Don't forget to subscribe for more content about changing generational wealth. In our next episode, we will discuss using a personal line of credit as a debt tool and how it can eliminate multiple credit cards at once. Thanks for joining me on this journey. Remember, family, you gotta think rich to grow rich, or you won't achieve it.